Hey Dave, how you doing today?
Not bad, Nick. How are you?
Good. Just living in a snow globe. Let's just try that over again.
Yeah,
Hey Dave, how you doing today?
not bad, Nick. How are you?
Doing well. Just living in the snow globe today.
Yep, yep. Such as January in Michigan.
So, speaking of snow globes and getting shaken up a little bit, we are going to talk a little bit about the debt ceiling and government spending and how that might impact you as an investor.
Yeah, fun stuff.
Feels like we've been here before.
We have 20 times in the last 20 years, actually, to some degree, one degree or another. And so yeah, what's going on? The government has a self-imposed debt limit in how much they're allowed to actually borrow with
Mhm.
treasury bonds and bills to back it. That limit is $31.4 trillion. And
Similar to my budget.
yeah, right. Add a zero, subtract a zero, whatever. Rounding errors. Yeah. So anyway, the debt ceiling has been reached because every year the government spends more money than it brings in. We haven't
Right.
had a budget surplus since the early 1990s at this point. And so every year, Congress needs to reauthorize and increase the debt ceiling.
Hmm.
And this year, there's concerns that there just won't be negotiations based on the makeup of Congress.
Boy, feels like we've been there before too.
I know, right? So it's important to understand this isn't a fight about future spendings per se. It's basically, are we going to pay for the things we've already spent money on? It's
Right.
like it's like you've run up your credit card and now you're going to decide if you're going to pay the bill or not,
Right.
right? And so that said, though, it makes a tool, it gives Congress people a lever to pull to get things that they want.
Hmm.
And so that's why it becomes an issue every so often.
Yep.
So, first of all, what the government hasn't defaulted on its debt yet.
Yep.
Nothing dire really happens until June. And right now the Treasury is doing things. Janet Yellen called them extraordinary measures, taking extraordinary measures to keep things going. But it really doesn't become an issue for a few more months.
Yeah. So going back to the past, if we could, Dave, and I can't remember exactly what year this was, but we actually got to the point where they shut down
Yeah,
the government for a couple
2011.
days. Yeah,
Yeah.
2011. So this is not unheard of, but be interested to hear your take on kind of what happened then and how that affected the markets.
Well, in 2011, we did see some market impact there, but interesting things happened. One is the Standard and Poor's actually downgraded U.S. debt at the time because
Yeah.
of this impasse, and instead of having a negative effect on Treasury bonds, as you would expect, um, yields on Treasury bonds actually went down, kind of with the attitude of, boy, if the U.S. is not doing well with its debt, then
Right.
things must really be bad, right? So we're going to buy more U.S. debt because it's still the safest instruments out there.
Right.
So even and the stock market actually did enter correction phase at the time, and it got really ugly for a while there. Um, so that was the biggest impact that one of these arguments has had over
Hmm.
as far as the markets are concerned. We've yet to see any impact over what's going on now.
Right.
The stock market for the first 3 or 4 weeks of the year here has been very, very positive, off to a very good start.
Hmm.
The bond market hasn't really reacted. Eric Stein at East Bay, our market gurus that we work with to build our portfolio, they did point out that there's been some volatility for government debt that does mature right around June and July that we're starting
Yeah.
to, but not, nothing, too exciting,
Yeah.
nothing beyond that at this point. So, the market basically is expecting that just like all the other times, there'll be a lot of grandstanding and a lot of arguing and people trying to make their point in Congress about how the future budget should be handled and try to gain
Right.
some leverage. But at the end of the day, it's posturing and brinksmanship, and they'll do what they need to do and raise the debt ceiling to pay the money that they've already spent, and
Right.
uh, and the world will go on.
Well, I think the important point here for our listeners, and as an investor, right, you're going to hear a lot more about this. You're going to hear a lot more about the fight. You're going to hear a lot more about the blustering, if you will.
Mm-hmm.
But at this point, it's just a lot of noise. And, nobody knows exactly the extent of where that's going to go and how it's going to resolve itself. So there's no point in making investment decisions around the unknown, right?
Right, right, and really trying to assess, like, if there is a complete impasse, what happens at that point? The government actually defaults on their debt. I'm not sure where the safe havens would be.
Right.
If that
Yeah.
actually, so what, if you think about what's at stake here, the U.S. dollar and the U.S. Treasury really is. I was going to use the cliche, the gold standard, but which is kind of funny in this context, but really is around the globe. It's how oil is priced is in U.S.
Right.
dollars, and it's an important piece of the world economy, and to see this play out in Congress is actually, a little bit embarrassing in a way. It's like, and to see the focus be on the debt ceiling I guess my point of view is, if they're going to do this, I'd like to see some good come of it. Like, let's sit down and have the talk about the future budget, like really
Right.
meaningful discussions about how this plays out in the long run,
Right.
not just crisis to crisis, you know,
Yeah.
year to year. So
Well, and kind of relating that to your personal situation, like we talked about, like you're arguing over whether or not you should pay the credit card, but you have
right,
no desire to think about curbing your
yeah,
spending or think about how that affects the actual credit
yeah,
card
right. Well,
payment. Do you know what I
and
mean?
and just deciding that, like say you've got a couple in the household, maybe this is a good way to think about it. And yeah, you've run up the credit card, and the one spouse says, "I'm not paying this bill until you make concessions on future spending." Right
Right.
now, that sounds tough, but what would actually happen to that couple if they didn't pay that credit card bill?
Right.
It wouldn't matter what they did in the future. Their credit would be ruined.
Yeah.
They'd have government actions against, there'd be folks garnishing their wages, and
Yeah.
it just and if you take that kind of thinking and think about it in terms of government, the last thing, none of them are going to have jobs. The government's not going to exist as we know it
Right.
if they
Yeah.
if they default on the debt.
Right.
So it's kind of like playing Russian roulette.
Yeah.
And nobody's going to
Exactly.
win. Nobody's
Well,
going to win. So
they just have, so much personal financial incentive to keep things going that it's just,
right, right,
it doesn't make sense for them to blow everything up.
yeah. Well, so in the meantime, what do we expect? Um, but it's too early to really tell how it'll play out. The
Mm-hmm.
market expects right now, based on the lack of volatility around this topic, that it'll play out like it usually does, where there'll be a lot of
Yeah.
noise around it, and then they'll go ahead and raise the debt ceiling anyway. Um, so sit tight, ignore the news if you can. This too shall pass. Is the most likely scenario.
Yep, and I love what Eric put in his kind of summary. Make sure your risk levels are where they should be,
Right.
and your asset allocation is set. Much more important than worrying about the debt ceiling and how that might affect you or trying to time it. So,
Yeah,
sound financial principles will prevail.
exactly. If your portfolio is set up the way it should be in the first place, you can get through these times of volatility and
Yeah.
silly political silliness.
Yep. It's easy for us to sit here and say, but it is concerning, and it is,
Sure.
it's everywhere. So, we understand that it's a scary thing, but staying the course and being a long term investor and having the right investment mix will go a much longer way than trying to worry about or do something different with your portfolio as a result of this.
Yeah.
So,
Yeah. Yeah.
Dave,
Oh,
as always, it's been a pleasure, my friend.
yes, sir. Thank you.